Spencer, your ahead of the tape column today really kind of laid it out that this was a critical report because the body of evidence was starting to accumulate of a real slowdown here. Did 10 a.m. change all that?
It did. I mean, there were some fears. It was a sigh of relief, not just because it was better than expected. It was 54.8.
Right.
Expectations were 53. Anything above 50 indicates an expansion.
And we're talking about the ISM manufacturing survey.
Exactly, ISM manufacturing.
Right, for April.
Right, and there's another one. There's another, actually more important ISM number coming out on Thursday that represents a larger swath of the economy, which is the non-manufacturing. Yeah, but there was a bit of a sigh of relief, and for multiple reasons. One is that yesterday the Chicago PMI, or what used to be called Chicago PMI, it's now the Chicago Business Barometer. They changed the name; it's still called that, which tracks very closely with ISM. Came out very disappointing, dropped 6 points, and was indicating that this number could be a big miss and possibly even go into contraction for the first time in 33 months, and that didn't happen. It was good, and the underlying, because they don't just give you a number, they give you kind of sub indices, and the right ones were good.
Right. Yeah. I mean, employment was up, new orders were up. Production was up. I think inventories were down.
Way up.
It was amazing.
4 points up in new orders.
This report this morning really broke exactly the way the bulls would want. Anyone who cares about the economy would want it to break.
And prices paid.
And prices paid.
Flat.
So
that's
it was really kind of a very interesting report in that it broke exactly like that. Is this one report? Now we realize this is a national survey, and we've been talking about a lot of the regional. So even the regional Fed surveys were weaker. Does this one report though change the entire tenor?
Well, I tell you what, it casts some doubt over a thesis that's been out there that there's a lot of seasonality. Come April, we're going to see a bit of a payback because for two reasons.
The warm winter and everything.
Exactly, the warm winter, and also there's seasonal adjustment data that goes in there that tends to kind of boost the colder months, January and February, and then depress these months. And so they're saying, come April, you're going to see a pretty big drop off, and you're going to see that the data early in the year weren't all they were
I don't know if it's still Norbert Orr that manages the ISM, but anyway, the person who's looking after the survey came out and said that based on these numbers, it equates with GDP growth of 4%.
Right.
4%.
Which is 4%. Yeah. So and this is an institution, of course, that still regards manufacturing as very important, albeit a much smaller portion of the economy. They see it as an important indicator because of the inventory effect and the sort of knock-on impact that comes from general manufacturing activity. So it really, in that sense, just speaks to what you're saying. That it's a very encouraging report.
Let's be for real here. Is there any hope of us getting a 4% GDP number? I mean, that seems like a very high number.
I mean, it's awfully unlikely. You just had advanced GDP on Friday, which is the first swipe
for the previous quarter,
the first quarter, and it came in pretty low. It came in a lot lower than expectations. Your second quarter was expected to be weaker than the first, based on everything you saw. So this is one number. It's a survey. Obviously, there's some margin for error. It's there's some volatility in the number, but it makes people feel a lot better this morning. That's for sure.
Yeah, and like I said, the Dow was up 80. Look, if we got a 4% GDP for any quarter or for the year, I mean, it would be just a great growth. It would really solve a lot of our problems.
The whole mood would change.
It really would. Well,
Paul would be a different person.
And it should. I mean, 4% GDP is real growth.
Right. It is.
I don't think we're going to get it, though. Spencer, Jakab, thank you very much.
Thank you.
Talk to you soon.
Thanks.